Welcome back to Investing Talk podcast. Today, we're going to be taking a close look at Kohls Corporation.
Okay.
For this deep dive, we've got a company overview, some recent news on how they've been performing,
Mhm.
and even a really in-depth due diligence report.
That's fantastic.
What we're going to try to do today is really extract some of the most crucial insights from all of this information
I like it.
to give you a really, really clear picture of where Kohls stands today in the market.
All right.
So we're going to be exploring their business model,
Okay.
recent financial results, what market analysts are saying, and of course, some of the challenges and opportunities that they are facing.
Sounds good.
All right, so to get us started, why don't we first unpack just the basics of what this company is all about?
Love it.
So, Kohls was founded in 1988,
Okay.
and they're headquartered in Menomonee Falls, Wisconsin.
Wisconsin.
Yes. And one of the things that kind of jumps out right off the bat is how they operate. They operate as what's called an omnichannel retailer across the U.S. So that means that you can shop both in one of their physical stores,
Right.
of which they have over 1,100,
Wow, that's a lot.
or hop online.
Gotcha.
Do all your shopping from the comfort of your own home.
Makes sense.
And when you're browsing either online or in-store, you're going to find a really, really wide variety of merchandise.
Like what?
Everything from apparel, footwear, to beauty products and home goods.
Oh, wow. So they really run the gamut.
They really do. They've also developed a really strong stable of their own private brands. So these are brands that you're only going to find at Kohl's.
Interesting.
Some of the names that you might recognize are Apt, Nine, Croft & Barrow,
I've heard of that one.
Sonoma Goods for Life. And then in addition to that, they also have some really recognizable partnerships with designers like L.C. Lauren Conrad
Okay.
and Vera Wang.
Oh, yeah, Vera Wang.
So it really paints a picture of a retailer that has a pretty broad reach
It does.
and is trying to cater to a lot of different customers.
Yeah, I mean, that's
Yeah.
really important these days, right?
Absolutely.
We got to have both a physical presence and a digital one.
Exactly.
And I think it's smart of them to cultivate
Mm.
those private label brands
Yeah.
because it shows that they really understand their core customer base.
And it gives them the potential to have a little bit higher margin on those products.
Makes sense. And the designer collaborations, that's smart too.
Exactly.
Bringing in a wider range of shoppers.
Absolutely so. Now that we kind of understand the basics of what this company is about, let's shift gears a little bit
Okay.
and talk about how the market has been treating their stock
Right.
and what their recent financial performance looks like. Now, from what I can see, it sounds like it's been a bit of a bumpy ride for Kohl's.
In what sense?
Well, over the past year, the stock has taken a pretty significant hit,
Oh, no.
dropping by a whopping 63%.
63%. Wow.
And when we look at the trading range, it's been pretty wide swinging, anywhere from $6.31 up to $28.25.
Wow, that's a big swing.
It is a really big swing. And one of the things that's really notable is that they saw a dip, a pretty significant dip,
Okay.
right after they released their fourth quarter earnings report.
Uh-huh.
And in that report, they also shared their projections for the 2025 fiscal year. And it seems like those projections didn't quite meet analysts' expectations.
So they underperformed.
It did underperform.
And the market didn't like that.
The market did not like that, and that's usually how it goes. When a company's future outlook doesn't quite align with what the market is anticipating, it triggers this reassessment
Uh-huh.
of the stock's value.
Right.
And investors tend to be very forward-looking. So when they see a guidance that's disappointing,
Yeah.
it can raise some concerns about profitability and growth in the future.
Makes sense. So that drop in the stock price is probably investors kind of adjusting their expectations based on that news.
Exactly, and potentially selling off shares as a result.
Gotcha.
So let's dig into the actual numbers a little bit.
Okay.
For the 2024 fiscal year, their net sales did see a decrease, coming in at $15.39 billion,
Okay.
compared to $16.59 billion the previous year.
Right.
And when we look at the net income, the drop was even more pronounced there,
Oh.
going all the way down to $109 million from $317 million.
That's significant.
It is significant, but there is one slight positive note.
Okay, let's hear it.
The gross margin rate did edge up a little bit to 37.2% from 36.7%.
All right, well, that's something.
It's something. And then on the liability side, they're carrying $3.13 billion
Okay.
in total current liabilities, and that includes some of their debt.
Gotcha. So what do you think is the most important takeaway from all of these numbers?
I think the decline in both the net sales and the net income
Yeah,
really signals that there are some underlying challenges that Kohls is facing.
right. It sounds like they might be having some difficulty driving revenue. Or maybe their operating costs have gone up, and that's impacting their profitability.
It's really hard to say for certain without having more information.
True, but it is interesting that their gross margin improved, even if it was just slightly.
It is interesting. I mean, it could mean that they're doing a better job of managing their costs of goods sold,
Yeah.
but it clearly wasn't enough to offset those declines in sales.
Right, and we definitely need to keep an eye on those current liabilities, too.
Yes,
Because that's a significant amount of money that they need to pay back in the near future.
absolutely. All right, so let's move on to what they're projecting
Right.
for the 2025 fiscal year. And I gotta say, the picture doesn't really brighten up a whole lot here.
Oh, no.
So they're anticipating net revenue to be around $16.2 billion,
Yeah.
which actually represents a projected 7.2% decrease
A decrease.
from the 2024 fiscal year.
Wow, so they're expecting to make even less money.
They are, and their earnings per share are forecasted to be just 98 cents.
98 cents.
Way down from $2.88 in 2024.
That's a big drop.
It's a huge drop.
Mm.
But here's where things get a little bit puzzling.
Okay, I'm intrigued.
Because when we look at their fourth quarter of the 2024 fiscal year,
Mm-hmm.
they actually saw net revenue of $5.4 billion.
Okay.
And their adjusted earnings per share were 95 cents,
Right.
which actually beat expectations.
So they ended the year strong, but they're not expecting that to continue.
That seems to be the case.
That is interesting.
It's a little bit of a head scratcher
Yeah.
because it seems like whatever positive factors were influencing that strong performance in the last quarter
Yeah.
might not be sustainable, or maybe they're seeing some serious headwinds on the horizon
That's possible.
that just weren't a factor in the immediate past.
It does make you wonder what could be driving such a significant projected downturn for the coming year.
It really does, and it gets even more granular than that.
Oh, how so?
Because when we look at their specific projections for fiscal year 2025,
Uh-huh.
they're expecting net sales to decline between 5% and 7%.
Okay.
Comparable sales to be down between 4% and 6%.
Wow.
And earnings per share to be somewhere in the range of just 10 cents to 60 cents.
Those are some pretty steep drops.
Those are really, really steep drops.
So what kind of pressure do you think this puts on the company?
Well, I think projections like that signal that there is significant pressure on Kohls right now
Yeah, it sounds like it.
to improve their performance.
Mm-hmm.
You know, the declining sales and the comparable sales being down suggests that they're having some trouble attracting customers, or maybe there's just less overall demand for the products that they're selling.
Yeah, and I imagine that drastic reduction in their earnings per share is making it harder for them to maintain profitability.
Exactly.
And when you have an outlook like that,
Yeah.
it can really shake investor confidence
Oh, absolutely.
and lead to even more stock volatility.
Yeah.
And then, of course, management is going to be under a lot of scrutiny
Yeah.
to come up with some strategies to turn things around.
Absolutely. And that brings us to some of the key challenges, or the red flags, as we've been calling them, that we can see in these sources.
Okay, let's hear them.
So as we've been talking about, we see this consistent decline in their sales and net income.
Right.
And then we also see that fiscal year 2025 guidance is significantly below what analysts were expecting.
Mhm.
And it's not just a recent blip. This revenue decline has actually been happening for the past few years.
Oh, wow.
And the expectation is that it's going to continue.
So it's a trend,
It's a trend.
not a good one.
And then that significant drop in their earnings per share really highlights that they've got some serious profitability hurdles to overcome.
Yeah, for sure.
Now, we also see in the information that you provided that they're taking some actions
Like what?
to try to address some of these issues.
Okay.
They're closing their San Bernardino e-commerce fulfillment center
Okay.
and also 27 underperforming stores by April 2025.
So they're downsizing.
They are downsizing. And as we've already talked about, the stock price dropped about 25% after that earnings report was released due to those really concerning projections for 2025.
Yeah, so what does this all tell us about the current state of their business?
I think all of this taken together really indicates that Kohls is under immense pressure to improve their performance and streamline their operations.
Right. It sounds like they're trying to cut costs by closing stores and that fulfillment center.
Exactly.
And that makes sense if demand is weakening and they need to boost profitability.
But the fact that the stock price dropped so dramatically really shows that the market just doesn't have confidence
Right.
in their immediate prospects
Makes sense.
based on that guidance. But it's not all doom and gloom.
Oh, good.
There are some strengths and opportunities that are highlighted for Kohls in these sources.
Okay, I'm listening.
So as we mentioned before, they do have a significant omnichannel presence
Right.
with all those stores and that developed online platform. They also have a really good portfolio of private label brands, and those established partnerships with designers like Elsie Lauren Conrad and Vera Wang. Now they also have a new CEO,
Oh, okay.
Ashley Buchanan, and he has some plans to try and revitalize Kohls.
How's he planning to do that?
He's really emphasizing product quality,
Sure.
value for the customer, and just improving the overall customer experience.
That sounds promising.
It does sound promising. And they're also focusing on enhancing those omnichannel capabilities to really try and create a seamless experience for shoppers, whether they're online or in the store.
Yeah, that's so important these days.
It is. And then here's another really interesting tidbit.
What's that?
Despite all of this negative recent performance, the stock did see a pretty decent surge.
Really?
8.63%.
Wow.
On March 24th of this year.
Okay, so very recently.
Very recently. And this was following reports of a new strategic plan
Interesting.
and a positive start to the first quarter.
So maybe there's hope after all.
There might be some hope. And then also, they're continuing to offer a quarterly dividend to their investors. 12.5 cents per share.
Not bad.
So how do we weigh all of these positives against the challenges that we talked about?
Well, I think that recent stock price movement and the news of that new strategic plan are definitely encouraging signs.
Yeah.
The market seems to be open to the idea of a turnaround, especially under new leadership.
Yeah.
I think investors are going to be watching closely to see if those initiatives that the CEO is talking about actually gain some traction.
Right. And that dividend payment offer some support for the stock price, particularly for investors who are really focused on generating income.
Makes sense.
But I think the million-dollar question here is, can they actually overcome these headwinds? And will these new strategies actually translate into improved financial performance?
Right. That's what really matters in the end.
It really is.
What do you think about the specifics of that new strategic plan? Do you know anything about what it entails?
Unfortunately, the sources that you provided didn't really go into a lot of detail.
Oh, bummer.
It was really just mentioned that it was reported and that it seemed to coincide with that positive start to the first quarter.
Okay.
So it really does leave us to speculate a little bit.
I guess so. Maybe they're addressing some of the concerns about declining sales, or perhaps they've come up with a new way to differentiate themselves from competitors?
Yeah, that's possible. So let's take a look at what the broader market sentiment is.
Okay.
And it seems like overall it's leaning a little bit negative.
Really?
Analysts have given Kohls a sell rating.
A sell rating, yikes.
And their 12-month price target is hovering around $10.75.
Oh, wow.
And when you look at public discussions on platforms like X and Reddit, it seems like a lot of people are concerned about their financial health and where they stand competitively.
Yeah.
And the sources that you provided mention Macy's and JCPenney as their key competitors.
Right, so they're up against some really big players in the retail space.
They are, and it's a really tough environment right now, both online and in physical stores.
Yeah, the competition is fierce.
It's really, really fierce. Now, Kohls has been trying to strengthen their omnichannel offerings and introduce new brand experiences.
Any samples?
Yeah, they've actually partnered with Babies R Us.
Oh, wow. That's interesting.
It is interesting. And we also saw that Telsey Advisory, which is an investment banking firm, reduced their price target to $13.
$13, okay.
But maintained a market perform rating.
So slightly less negative than a sell rating.
Exactly. So it seems like even among analysts, there are some mixed opinions on Kohls.
Yeah, you've got the majority saying sell, but then you've got Telsey Advisory with a slightly more neutral stance.
Yeah. What do you make of all that?
It definitely indicates that there's some uncertainty surrounding Kohl's future.
Yeah.
I mean, that sell rating suggests that a lot of analysts are worried about the company's current trajectory and their near-term prospects. But on the flip side, you've got that market perform rating.
Right.
And we also saw that little bump in the stock price recently.
Right. Exactly.
So it's not like everyone is completely writing them off.
It seems like some people recognize that there's potential there for a successful turnaround, but they're still hesitant because they're not seeing enough evidence yet that Kohls can really execute effectively in this challenging environment.
And like you mentioned before, they're in a really competitive landscape.
They are.
So they need to find a way to stand out.
Exactly. All right, so as we kind of wrap things up here, let's talk about what we should be keeping an eye on moving forward.
Okay.
Sounds good. What are some of the things that we really need to be paying attention to? So it seems like the success of this repositioning that the new CEO is trying to implement is going to be really crucial.
Right. Can he actually improve their products and the customer experience?
Exactly.
That's going to be key.
But of course, we can't ignore all the external risks that are out there.
Like what?
Well, the overall health of the retail sector is something to consider. And then there's the potential for an economic downturn.
Right. That could hurt them.
It could hurt everyone. And then, of course, there's that ever-increasing competition from the e-commerce giants like Amazon.
Yeah, they're a force to be reckoned with.
They really are. So all of that makes that next earnings report, which is scheduled for May 29th, 2025, feel really, really important.
Oh, yeah. That's going to be a big one.
Because it should give us a much clearer picture of whether this turnaround strategy is actually working and if they're starting to see those improvements in profitability.
So what are you going to be watching for specifically in that report?
I'm really going to be focusing on whether they're showing any signs of stabilizing or even growing their sales. Any improvement in those comparable sales would be a really positive sign.
It would.
And then I'm also going to be looking for any updates on how their strategic initiatives are progressing and whether those efforts are actually starting to translate into better margins and ultimately a healthier bottom line. And then, of course, their commentary on the outlook for the rest of the fiscal year is going to be really crucial as well.
For sure.
Now, just to kind of summarize the analyst perspectives that we've seen, the general consensus is still a sell rating, with that average price target of around $10.75.
Okay.
Even with that slightly more optimistic view. From Telsey Advisory at $13, but they still have a neutral stance.
Right. So it sounds like the professional financial community is still pretty cautious.
They're definitely being cautious. And I think that really underscores the need for Kohls to show some tangible progress in their financial performance.
Yeah, they need to prove to the market that they can turn things around.
Exactly. So based on everything that we've talked about today, I think the overall assessment would probably have to be a sell recommendation at this point.
I would agree with that.
And that's really driven by those declining sales trends, that weak financial guidance for the coming year, and that incredibly competitive market that they're operating in.
Right. There are a lot of challenges ahead for Kohls.
There really are. The short-term outlook definitely seems uncertain.
I agree.
But, given that they have a new CEO and some new strategic initiatives, I think it makes sense to keep an eye on them over the long term.
Yeah.
To see if those changes can actually lead to a meaningful turnaround.
It's worth monitoring their progress.
It is. So what are your final thoughts on all of this?
Well, I think there is some potential positives on the horizon, like you mentioned with that new strategic direction. But the financial data that we've looked at today and those near-term projections definitely paint a challenging picture.
Yes, they do. So for anyone who's thinking about investing in Kohls, it seems like a situation that requires a lot of careful observation and a cautious approach.
Yeah, don't jump in blindly.
Exactly. Wait for more concrete evidence of that successful turnaround before you even think about taking a more optimistic stance.
Sounds like solid advice.
All right, so to sum it all up, we see a company with a long history, a big presence in the retail market, but they're facing some really strong headwinds right now.
They are.
And while there are efforts underway to steer the ship in a new direction, that immediate outlook looks tough.
Yeah, based on the data we've seen.
And that volatility in the Kohl stock price and all the differing opinions that we've seen from analysts really highlights how complex the situation is.
It does.
And it also underscored how important it is to consider all the different data points and perspectives when you're trying to figure out if a company is a good investment or not.
Yeah, never rely on just one source of information.
Exactly. So hopefully this deep dive today has given you a better understanding of where Kohls stands based on the sources that you provided. But it's important to remember that this is just a snapshot.
Right.
There's always more research that you can do. You can review their SEC filings. You can track their progress over the coming quarters to get an even more complete picture. So what stands out to you the most from all of this information? What other questions do you have? We really encourage you to keep digging, keep learning, and don't be afraid to do your own research.
Good advice.
Thanks for joining us today. For this deep dive into Kohls, if you found this analysis helpful, please hit that subscribe button, give us a like, and leave a comment down below. We always appreciate your engagement, and we'll see you next time.